What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to talk about some stocks that we're watching for the next couple weeks. These stocks include names like Tesla, Roblox, Boeing, NVDA, and CRM, which is Salesforce. We're going to first talk about some key levels that we need to watch for the weeks ahead. Markets are preparing for the CPI report, which will give us an update on inflation. However, we are still dealing with the SVB bank, the Silicon Valley Bank that collapsed on Friday and last week. So markets will be coming into this week with a little bit of panic. We're going to give you some supports and some resistance points to focus on, and we're going to do so for the stocks that we're watching as well. That way you know exactly what strategy we're going to take on these stocks and when to take your profits and how to enter them. So let's go ahead and get started by first talking about SPY. Now SPY here on the daily chart, we have it pulled up and we can see that SPY is trading back at a very critical trend line. So for the last year or so, we can see that SPY has been on a consistent decline. Every time it's gone up, it's gotten rejected right around the same trend line up until this point here. Back in the beginning of 2023 when we saw a big breakout, we got rejected just below 420 and now we're back right at that exact trend line. Now keep in mind that Friday showed the strongest selling volume since January 2022. So if we started our market descend in January 22, and that's when we saw the biggest selling volume, and now we're seeing it again, it could signal that there's going to be more downward spiral to come. So if you are a bear or a bull on the market, your first thing to pay attention to is going to be this major trend line. So look at the daily candles when you do have a chance and look at where SPY is trading compared to this trend line, and you're going to be able to tell if buyers are winning or bears or sellers are winning based on where we're trading. Right now, as of last week, we are trading just above that trend line, but this week, considering there's a lot of panic and a lot of fears around the banking system, we could definitely break below it. And we're going to look at SPY here on the daily candles on Thinkorswim, where we can see that that volume was indeed very strong, as we said, and SPY is trading back below all of its key moving averages. Now, the moving averages that we have on our chart are going to be the 10, 20, 50, and 100 and 200 day moving averages. So we use the 10 and 20 for the short term. We kind of see the short term trend. The 50-day moving average, institutional traders, they use that to actually tell where the overall trend is. Anything above 50 is considered bullish. Anything below is considered more bearish. And then the 100 and 200 are very critical institutional entry and exit zones. So if a stock falls below the 10 and 20, or I'm sorry, that's 100 and 200, that means we are likely going to see profit taking. But if it manages to find buyers at that level, that means people are interested because those are very long-term moving averages and people are going to want to enter at those moving averages. And so we can see that SPY here has moved back below, and when it moved back below, that's when the volume started to really increase and the sell-off started to really take hold. So now switching gears and going into this week, our first support is going to be at 384.30. That number simply came from Friday's lows. That was the lowest point we reached before we bounced. So that's going to be our first support and focus for the week. Now, some events that we are watching this week are going to be the CPI report, February retail numbers, and consumer sentiment. So apart from the entire banking system failure, we are also looking at the CPI report, which will give us an update on inflation. So remember, last month, inflation showed an uptick against expectations for the first time in 3 months. So the trend on inflation was going down since June of last year, and then suddenly we see an uptick of inflation because consumers are spending a lot. Now, with that being said, inflation is going to be the determinant for the Fed in deciding whether they're going to raise rates by 50 basis points or 25 basis points. So the entire catastrophe that's happening in the banking system and every company that's going belly up right now, a lot of them can be attributed to the fact that we are seeing higher interest rates. Higher interest rates simply make it harder for companies to survive because money costs more to borrow. And in the technology sector, these tech startups, they need a lot of money to get their self off the ground because it requires a ton of employment, a ton of R&D, and a ton of work, So with that being said, if the Feds see that inflation has gone up on this CPI report, that means on their next meeting, they will likely raise rates by 50 basis points instead of the expected 25. Now, if there's a kryptonite to the stock market, it's higher interest rates. Stocks simply don't thrive during high interest rate environments. And so if we do see the Fed being forced to raise rates by 50 basis points, we can very much see the 52-week low on SPY and come back down towards 348. It doesn't mean it's going to happen this week. It doesn't mean it's going to happen next week, but higher interest rates are simply only going to bring us down until we see a moment in which the Fed decide to switch policy and they go from hawkish to dovish, as they call it. So now talking about the next support of below 382.65. So Monday is probably going to be a little bit slow. Tuesday, when the CPI report comes out, that's when we're really going to see a lot of movement, because the market is going to be kind of sitting on the edge of their seat trying to figure out where inflation lies right now. And so if it comes in higher than expected and we move lower than 382.65, I'm not seeing many supports below 382.65 down until 375. So we can very much continue our downward spiral towards 375. And either if we do get a pop or a move up, it is likely only going to reach a high of around 395, 393 before it gets shot back down. So to the top side, we are looking at a 393.80 pivot point. So if we can make it back above 393.80, then there is a small chance that the bulls can reclaim their territory and move us back into a bullish range. And the bullish range would be above 397.35. Anywhere below that point, we are very much likely to sell back down. So if you are looking for strategies to play the market this week, it's probably not a good idea to bet long. It's probably a better idea to find somewhere that's like a top and then short it and then put a safe stop loss just above a resistance point. So for example, if the market rallies to 393.50, you can potentially enter a small short or a put position and then put a stop loss just below 393.80, because if we break back above that point, that means buyers are definitely stronger. So now let's move on to the watch list. This is the moment we've all been waiting for. We're going to start the bottom to the top. So we're going to start off with CRM, which is Salesforce. Now, Salesforce was a favorite of ours just a couple weeks ago. Salesforce launched on their earnings. They reported excellent earnings, and the company saw a very strong upside move. Now, typically when stocks see a very strong upside move on earnings, they continue that move up, and we like to watch them for the weeks ahead because we like to take advantage of that move up. Unfortunately, the market situation and overall health of the market did not allow Salesforce to make that move up. In fact, everybody that bought it up has managed to sell it back down, and it's nearly filled its earnings gap. So going into this week, considering there's a ton of selling going on with Salesforce, we are focused more on the downside, but we are willing to play both sides. Now let's show you which numbers we're focused on mainly for the week. Salesforce support is 170.170, and so if it breaks below 170.170, we are looking to short the position or take a put on the stock, and we would hold our put down to a price target of 166.50, and if it breaks below 166.50, we will hold our puts down to 161.50. We would give ourselves a few weeks on these puts at least, and we would take half profits at 166.50 and raise our stop loss to 170.170. So if the stock does move back above 170.170 and we are holding puts, then we would just cut the position. If it hits 166.50, we will take profits on half our puts, continue holding the other half down to 161.50 or around 162. The next stock on our watch list is going to be NVDA. Now, NVDA is a name that we find extremely overvalued. I know many people are very hyped about NVIDIA and they think that this company is going to be a winner. Long term, it very much could be. The stock is doing great things. The company is moving in the right direction, but it is currently extremely overvalued and it needs to come down by at least half, we will say. So half is even an understatement. It needs to come down more to really move into a proper valuation. But for now, for the short term, let's talk about NVIDIA and where it lies on the chart. So NVIDIA has been on a monster rally ever since January, and we can see that it's been testing the 10 and 20-day moving averages, coming down to the 10 and bouncing, coming down to the 20 and bouncing, and now it's back to the 20 once again. Now, the fact that the stock has been down to the 20 twice in a matter of a month, even through the strong rally, suggests that the stock is ready for a stronger pullback, likely towards the 50-day moving average. So here are the short-term targets for NVIDIA. Below 227.25, we wouldn't get into the position yet. If it breaks below 223, then we would short or enter a put position down to a price target of around 215 to 217. NVIDIA would need to break back above 238.70 in order to pivot back into a bullish range, and even above that, it would have only a price target of around 244 to 245.50. The reason that's the price target is because that's where it got rejected, and that would be considered a breakout point. So if NVIDIA somehow, some way finds enough buyers this week or the next couple weeks to break above 244.54, then we would talk about a different price target above the breakout point. But chances are, considering the market conditions this week, we are not likely to rally anytime soon. It's going to be very hard for buyers to gain confidence in this market. The next stock on our watch list is going to be Boeing. Just like NVIDIA, Boeing was moving very beautifully on the 10 and 20-day moving averages until you can see the stock broke back below and moved to the 50-day moving average, which is exactly why we suggest that NVIDIA is eventually going to find its way back to the 50-day moving average, currently trading at 198.97. Remember, these are changing numbers, so every day they are updated because it is an average of the last 50 days. So in this case, if NVIDIA does break below the 20, it can slowly crawl itself down to that 50-day moving average, same exact way that Boeing did here. So now Boeing is trading below its 10, 20, 50-day moving averages. The reason we're really watching this stock is because Boeing actually has been securing many contracts, and they just secured one over the weekend. And so as much as we like to think that this stock is going to go up, we are still very understanding that the market conditions may not allow it to go up, and so we're coming in with an open mind. If the stock breaks above 205, then we would consider buying a long or a call position and only taking it to a price target of around 209 and a second optimistic price target of around 212. If the stock moves down as the market moves down, and if the market moves down, then we would be looking for a break below 196.50 to a price target of around 191.80 to 192. The next stock on our watch list is going to be Roblox. Now, Roblox is a company that we're watching because the stock or the company announced that they are holding a cash in SVB or Silicon Valley Bank. So they're one of the companies that's going to be affected by the downfall, and so is Roku, by the way. Those are going to be the most prominent names, but Roblox is going to be the main focus because Roku, we find that their option contracts trade at a little bit too high of an implied volatility. Implied volatility is pretty much inflating the price of the contract, so we don't find those contracts worth it. But if we find Roblox contracts that have low implied volatility this week, then we are willing to take them. Keep in mind, anytime there's big news or big articles around companies, it's going to automatically move implied volatility up. So if we talk about implied volatility on Roblox right now, implied volatility is right around 96%, which is higher than we usually like implied volatility to be. We usually like our implied volatility between 30 and 60%. So keep that in mind when you are taking these contracts, is that their implied volatility right now is trading at a higher percentage because there is a lot of news around them. So implied volatility measures the expected move, and so the expected move is naturally higher, therefore adding to the base price of the option, which is called its extrinsic value. And so we are watching Roblox. Here's the way we plan to trade Roblox. We were looking at a break below 39.10 for a move towards 37. And if it moves below 37, then we are looking at a price target of 35.80. Now to the top side, if somehow, some way, Roblox manages to find buyers through all the market ruckus, we would be looking at a breakout above 42.65. Price target would be around 44.40, and second price target would be around 46. So keep in mind, with everything we're teaching you here, if the stock breaks above 42.65 and you need a stop loss, your resistance should automatically turn into a support when the stock moves above it. So you'd want your stop loss just below that level. And when the stock moves above your first price target, then you're going to move your stop loss from below here to below here. That way you're securing your profits and you're moving your stop loss tighter and tighter to secure more profits. Same thing to the downside. If you decide to short the stock or take out a put position, when your support is broken, it automatically turns into a resistance point, and this is where we get pivot points from. And then if the stock moves back above it, then you would get out of your short or put position because you know that the break failed. Now, last but not least, the one we've all been waiting for, Tesla. So what are we doing with Tesla this week? So Tesla, actually last week, we actually traded calls on Tesla in our group. Even though the entire market was falling apart, we actually traded calls early in the morning. We entered here and we exited right around here. It was a beautiful play, and Tesla managed to hold the company that has been selling off for weeks now managed to hold its lows and not fall further with the market. And so this week with Tesla, these are the levels that we're focused on. So Tesla came down to a low of 168.44 last week. We're going to call that 168.30. So that's going to be our main support and focus. If the stock moves below 168.30, then our next price target is going to be 162.70. Now you have to be very careful because Tesla has been selling off for quite a while, so its downside price targets are a little bit more gracious. We're not looking for a move all the way down to 153 right away. We're looking only for a move to 162.70. We would likely capture most of our profits there, and then we would hold maybe one or two runners to 153 or 155 if it gives us that move. If Tesla manages to break above 178.30, that would be a big pivot to the top because we can see that on Friday, the stock made it to a high of 178.30 and got rejected back down. Very strong rejection. So if the stock manages to break above that point, we would actually go long and we would trade it all the way up to a price target of 185, which is where it had its last rejection, just below the 50-day moving average on the hourly candles. Looking at it on the daily candles, we can see the stock is back down to its 50-day moving average, so it's broken below the 10, 20, 100, and 200-day moving averages, and it's back down to the 50-day moving average. Remember, we said the 50-day moving average is a big moving average for institutions because they determine if a stock is more bearish or bullish based on if it's trading above or below that 50-day moving average. So there's a ton to focus on this week. We are probably going to see the most movement after the CPI report, so pay close attention to CPI numbers and where inflation comes. And best of luck. Thank you so much for checking in.